Why do some earn millions yearly, yet are deep in debt, while a low-paid teacher retires a millionaire? The truth is, your salary does not determine your wealth. This is a common misconception.
If you save only what's left after spending, you'll never truly retire comfortably.
Today, I'll reveal 7 money rules the super rich always apply. Especially rule number 5. Don't miss a second, because every year you delay costs you hundreds of thousands. The average American saves only 4.6%. This figure means they may never retire.
This low savings rate creates a massive gap, jeopardizing their financial future and retirement dreams.
But there's a path to real wealth. Let's dive into the first crucial rule. Rule number 1. Pay yourself first. Prioritize your savings and investments above all else.
Automatically deduct at least 20% of your income for investing before touching your paycheck.
This automation ensures your wealth grows consistently, removing the temptation to overspend. Think of it like a tax, but instead of the government, you're paying your future self. Rule number 2. Do not invest money you need in the short term. It's too risky. Money needed within 3 years shouldn't be in the stock market. Market fluctuations are too unpredictable. Instead, park these funds in a high-yield savings account or short-term bonds. This protects your capital from unexpected market downturns, ensuring it's there when needed.
Rule number 3. Clearly distinguish between assets and liabilities. This is fundamental.
True assets put money into your pocket, like dividends from stocks or rental income. Liabilities, conversely, take money out. Think cars, credit card debt, or consumer goods. Focus on acquiring income-generating assets, reducing liabilities to build lasting wealth. Rule number 4. Diversify your investments sufficiently, but avoid overcomplication. Don't own 5 different ETFs that all primarily track the S&P 500. That's not real diversification. Diversify across different asset classes. Consider gold, real estate, and even Bitcoin.
A well-diversified portfolio reduces risk and provides resilience during market volatility.
Rule number 5. Time in the market is far more important than timing the market. Data proves missing just 10 best-performing days halves your total investment returns.
Oh man.
Consistent, long-term investment, even during downturns, yields superior results. Don't panic sell. Stay invested. Compounding works wonders over decades. Rule number 6. Income is not wealth. This is a common, dangerous misconception. Earning $400,000 annually can still result in negative net worth if spending is excessive.
True wealth lies in the gap between your income and your expenditures.
Control your spending. Live below your means, and that gap will create your fortune. Rule number 7. Start immediately. Don't wait. Every moment counts. This is the immense power of compound interest, your greatest ally in building wealth. Each year you procrastinate could cost you hundreds of thousands of dollars in retirement. The best time to plant a tree was 20 years ago. The second best time is now. Now, for 3 self-check questions to begin transforming your finances immediately. Second, are you actively distinguishing and acquiring true assets, minimizing liabilities? Third, are you committed to staying invested for the long term, avoiding market timing? Answer these honestly. Your financial future truly begins with these actions today.
This isn't just about saving money. It's a profound shift in your financial mindset.
You're prioritizing your future self, building a strong foundation for financial freedom and security. Set up automatic transfers to your investment accounts on payday. Make it non-negotiable. You'll immediately feel more in control, watching your wealth grow effortlessly over time. With that solid base, let's explore our next vital principle for smart money management. Understanding liquidity is crucial. Short-term needs demand accessible, stable funds. Exposing your emergency fund or down payment to stock market volatility is irresponsible. High-yield savings accounts offer better returns than traditional savings, while remaining secure. Short-term bonds provide slightly higher returns than HYSA, with minimal risk for short periods. Now that your emergency funds are secure, let's redefine how you view your possessions. Many mistakenly believe their house or car are assets. Sometimes they're actually liabilities. A house you live in takes money out through mortgage, taxes, maintenance. It's not an asset. However, a rental property putting money into your pocket, now that's a true asset. Consistently acquire more assets, shed liabilities, and your net worth will steadily climb. Understanding assets is key. Now, let's discuss how to properly spread those assets around. Concentrating investments too narrowly leaves you vulnerable to specific market downturns. While stocks are great, true diversification means exploring non-correlated asset classes. Gold offers stability, real estate provides income, and Bitcoin can be a hedge against inflation. Remember the old adage, don't put all your eggs in one basket. It holds true for wealth. This brings us to a crucial insight, especially for those new to investing. Pay close attention. Many investors believe they can predict market ups and downs. This is largely an illusion.
Even seasoned professionals struggle to consistently time the market. The odds are against you.
Getting into the market early and staying there consistently is the real secret to long-term gains. Allowing your investments to compound over decades, through highs and lows, generates massive returns. Embrace a set-it-and-forget-it strategy. Invest regularly and let time work its magic. This next rule directly challenges a common belief about what it means to be truly wealthy. A high salary creates the illusion of wealth, but spending habits are the real determinant. Lifestyle creep is a silent killer of wealth. As income rises, so often does unnecessary spending. Wealth isn't how much you earn, it's how much you keep and grow after all expenses. Be intentional with every dollar. Choose to build assets, not just consume them. The final rule is perhaps the most powerful, activating all previous principles. Listen closely. Compound interest is often called the eighth wonder of the world. It's a true financial miracle. Imagine two investors. One starts at 25, the other at 35. The 10-year delay costs millions. Don't let paralysis by analysis or fear prevent you from taking that crucial first step today. Even small, consistent contributions now will snowball into a significant fortune later. We've covered paying yourself first, securing short-term funds, and identifying true asset. Next, smart diversification, the power of time and market, and the income-wealth distinction. These aren't just rules. They're a framework for a completely new financial mindset and lifestyle. Financial literacy empowers you, replacing anxiety with confidence and clear purpose. Wealth building is a journey, not a sprint. Consistency and patience are your greatest virtues. Avoid the common pitfalls of get-rich-quick schemes. They rarely work long-term. Educate yourself continuously. The more you know, the better decisions you'll make. Cultivate good financial habits. They are the bedrock of lasting prosperity and freedom. Imagine the future you deserve, free from financial stress, living life on your own terms. That future isn't a dream. It's a reality you can create by applying these principles starting today. Your financial journey is unique, but these universal rules apply to everyone seeking wealth. Be patient with your progress. Small, consistent steps lead to monumental gains over time. Celebrate your small wins. Each step forward reinforces positive financial behavior. The responsibility for your financial future rests solely with you. Take charge now. Remember, your income doesn't define your wealth. Your habits do. Change them today. If these rules resonate with you, share this video with someone who needs financial clarity. What's your biggest financial takeaway or challenge? Let me know in the comments below. Stay tuned for more in-depth personal finance strategies to supercharge your wealth journey. You have the power to transform your financial reality. Believe in yourself and start small. Remember, consistent action, however small, always outweighs infrequent, large efforts. Build a legacy of financial wisdom and security for yourself and your loved ones. Don't delay another day. Your future wealthy self will thank you for starting now. Recap. Prioritize saving. Make that 20% automatic, a non-negotiable part of your financial plan. Your short-term money belongs in safe havens, not the volatile stock market. Be smart. Focus on assets that put money in your pocket and shed those that take it out. Diversify across different asset classes for true portfolio resilience. Don't overdo it. Time in the market beats timing the market. Stay invested for long-term compounding growth. Your wealth is the gap between income and spending. Manage that gap wisely. The power of now is immense. Don't delay your financial transformation. Begin today.
Have you automated at least 20% of your income into investments? Check that box.
Are you actively distinguishing and acquiring true assets, minimizing liabilities? Are you committed to long-term investing, avoiding market timing? Excellent. See, that's how it's done. If you answered yes to all, Fantastic! If not, today is your day to start making changes. Embrace these principles and watch your financial destiny transform. You can do this.